Welcome to the Defence Home Ownership Assistance Scheme, or DHOAS as it's commonly known. This video will cover everything you need to know, including what DHOAS is, how it works, and how to access it. We'll be explaining what is DHOAS and how you can qualify, how DHOAS subsidy entitlement works, conditions to commence and maintain entitlement, changes in your circumstances that might affect your entitlements, and how to apply for and start receiving subsidy entitlement. Since the 1st of July 2008, DHOAS forms part of a comprehensive defence retention and recruitment strategy aimed to attract, retain, and reward ADF members for their service. The scheme aims to help you pay off your home loan by paying a monthly subsidy into your DHOAS home loan account. The scheme provides 3 levels of support known as subsidy tiers. The longer you serve in the ADF, the higher your subsidy tier level, and potentially the higher your monthly subsidy could be. Additionally, the longer you serve, the longer you could potentially receive monthly subsidy payments for. We'll look at these points in more detail later on. DHOAS is a defence-owned scheme designed for defence members. It is administered by the Department of Veterans Affairs, who are responsible for receiving and assessing applications and determining eligibility for subsidy certificates. DVA is committed to best practice administration of DHOAS, ensuring the scheme is managed effectively and that clients receive high quality service and support. As you navigate the scheme, you'll frequently come across the term subsidy certificate, a key component throughout your DHOAS journey. A subsidy certificate is issued to eligible applicants confirming their entitlement to DHOAS. This subsidy certificate is used by DHOAS home loan providers to establish a Defence Force home loan product, provided you meet their lending criteria. If you are eligible, once your home loan settles, your bank will report your DHOAS home loan to DVA. From there, we reach out to you to confirm that you meet scheme conditions necessary to start receiving subsidy payments. If you are eligible, we then arrange for your subsidy payments to start, and we also manage the ongoing nature of those payments over time. This includes service milestones such as an increase to your subsidy tier level or other life or service events which may impact your entitlement. DHOAS home loan products are offered by a panel of approved DHOAS home loan providers, and we encourage you to research the best home loan product and home loan provider for you based on your personal and financial situation and circumstances. You can view the current list of approved providers on our website, dhoas.gov.au. Before receiving DHOAS subsidy payments, you must first qualify for the scheme and be issued a subsidy certificate. Eligibility for a subsidy certificate is based on 3 main factors. 1. You must have completed effective service on or after the 1st of July 2008. 2. You must have completed a minimum qualifying period of effective service, followed by 3. You must have completed sufficient effective service to accrue entitlements to DHOAS, which are known as service credits. To receive DHOAS subsidy payments, you will need to take out a DHOAS home loan using a valid subsidy certificate and meet all the scheme conditions, including the occupancy requirement. We'll discuss these in more detail a little later. The minimum qualifying period is 2 consecutive years of effective permanent ADF service or 4 years of effective ADF reserve service. Now, it's important to note that effective service works differently for permanent members and reservists. For permanent members, during their qualifying period, effective service is each day, week, month of paid service they complete. However, for reservists, effective service is measured in financial years. This means for each financial year a reservist has completed 20 or more paid days of service, they are deemed effective for that entire financial year. To complete that 4-year qualifying period, a reservist must have completed 20 or more paid days of service in each of those 4 consecutive financial years. There can also be impacts if you have a break in effective service or transfer between service types during the qualifying period. For example, if you have a break in effective service of 12 months or more during the qualifying period, your qualifying period will reset, meaning you will need to restart it from the date you return to effective service. In addition, the length of the qualifying period can be impacted if you transfer between service types during this period. So, that's 2 consecutive years of effective permanent ADF service for permanent members to complete their qualifying period, or 4 consecutive years of effective ADF reserve service for reservists. After you complete the qualifying period, you start to accrue what's known as service credits, which are based on your effective ADF service. Service credits are your entitlement period under the scheme. They determine how long you can receive DHOAS subsidy payments for. 1 service credit equals 1 monthly subsidy payment. When accruing service credits, permanent ADF members accrue them monthly, whereas reservists accrue service credits per financial year. With this in mind, permanent ADF members become fully eligible for a subsidy certificate after completing 2 years and 1 month of effective service. That is, they complete their 2-year qualifying period and then accrue at least 1 month of service credit to use towards their subsidy payments. In contrast, reservists earn 12 service credits for each financial year of effective service completed after their 4-year qualifying period. As a result, reservists typically become eligible for a subsidy certificate after 5 years of effective service. Service credits are always measured in years and months, and there is a cap on the maximum service credits you can accrue. The maximum is 20 years of service credits, regardless of your service type. However, if you have completed warlike service, your maximum service credits can be as high as 25 years. This is because of the warlike service bonus. If you have completed operational warlike service, whether across 1 or multiple eligible operations, you can receive an additional 2 to 5 years of service credits. How much warlike service bonus you will receive will depend on the total length of time you've spent in those warlike operational zones. For example, if you've completed 3 months or less of warlike service, even as little as 1 day, you are entitled to an additional 2 years of service credits. At the other end of the scale, serving more than 9 months in warlike operational zones qualifies you for the maximum warlike service bonus of 5 years additional service credits. A quick note that warlike service does not accelerate your qualifying period, nor does it make you eligible for a higher subsidy tier level. It just extends the length of time that you can receive subsidy for. Service credits reduce for each month that subsidy is paid to you. So, if you have received DHOAS subsidy payments previously, or if you've received monthly subsidy payments under a previous Defence Home Loan scheme, these months of payment need to be subtracted from your currently available DHOAS service credits. Here's an example of how your entitlement is calculated based on individual circumstances. In this case, the member has completed 6 years of effective service after completing their qualifying period, which entitles them to 6 years of service credits. They've also undertaken enough warlike service to earn an additional 3 years of service credits on top of that. However, they have already received 2 years of previous monthly subsidy assistance, which we need to subtract. So, when you add it all up, 6 years effective service, plus 3 years warlike service credits, minus 2 years of prior subsidy payments, equals 7 years of available service credits. Let's quickly recap what we've covered so far. DHOAS eligibility, qualifying period, service credits, warlike service, and a service credit calculation example. So, subsidy calculations and tier levels. What are these? How are they calculated? And how much you can potentially receive each month? Let's jump in. Your monthly DHOAS subsidy is calculated based on 2 key factors: the number of years of effective service you have completed in the ADF, and your home loan balance at the time it's reported to DVA. As previously mentioned, DHOAS offers 3 levels of support known as tier levels. And for each tier level is a corresponding subsidized loan limit, which determines how much of your DHOAS loan can be subsidized. Your tier level is determined by your total length of effective service. Tier 1 is the entry-level tier, requiring the least amount of effective service, while Tier 3 is the highest, requiring the most. The table displayed shows the maximum subsidy amount available if your home loan balance exceeds your tier's subsidized loan limit. Keep in mind, your monthly subsidy is calculated using the lesser of either the subsidized loan limit for your eligible tier level or your home loan balance. The subsidized loan limits for each tier is based on a percentage of the average Australian house price and is reviewed each financial year. The subsidy is calculated each month and based on the median interest rate data provided by Canstar. Please note that this is different to the interest rate your bank applies to your DHOAS home loan. What is the lump sum payment option? Well, depending on your available service credits, you can potentially convert up to 48 months of your already accrued service credits into a lump sum payment, which you'll receive when your monthly DHOAS payments commence. To be eligible for the lump sum payment, you must be buying or building your first home since enlisting in the ADF and continue to provide effective service for a further year after accessing the lump sum. There are some additional points to consider if you're looking to access the lump sum payment. If you buy your first home or complete the construction before your subsidy certificate is issued, you will be ineligible for the lump sum payment. You must retain enough service credits to sustain ongoing monthly payments. The lump sum is always paid at the Tier 1 level, regardless of what your eligible tier level is. The lump sum is paid into your home loan account after the loan is established, which means it cannot be used towards a deposit. For those members who aren't eligible for the lump sum payment, not to worry. The lump sum payment is not an additional entitlement, but rather a conversion of already accrued service credits. This means that even if you can't receive the lump sum, you can still utilize your service credits in the form of monthly payments. So, beyond meeting the qualifying period and accruing service credits, in order to receive monthly subsidy payments, you must also comply with key scheme conditions. DHOAS home loans must be secured by the subsidised property and can only be used for buying a home, buying land, building a home, renovating or extending your home, or refinancing a loan for one of these purposes. In essence, your DHOAS home loan must be for housing purposes related to your subsidised property. Your DHOAS home loan must be for your primary place of residence and not used primarily for running a business, trade, or profession. You and or your family must occupy your subsidised home before payments can commence and continue to occupy for at least 12 months after payments commence. If building a home, you can start receiving payments before occupying the property. However, you have 2 years from when you first start receiving DHOAS subsidy payments to complete the construction process and occupy the home if you want payments to continue. Upon completion of construction, once your property is deemed occupiable, you are required to occupy the home for 12 months. We will now cover the following: how changes in your circumstances may affect your ongoing eligibility and entitlement, how to apply for a subsidy certificate, what to do once you receive your subsidy certificate, and how to authorise the commencement of your subsidy payments.
Changes to your circumstances can affect your ongoing DHOAS eligibility and entitlement. For this reason, it's important to familiarise yourself with the requirements of DHOAS and to advise DVA of any notifiable changes as soon as possible. This will allow DVA to minimise any negative impacts on your subsidy payments. It is especially important that you advise us of changes that affect the way your DHOAS service credits or subsidy payments are calculated. This will ensure that you either receive the additional subsidy, which you're entitled to, or you do not receive an overpayment of subsidy. One of the first changes in circumstances to be mindful of is service related, and this is breaks in effective service. For DHOAS purposes, if you have a break in effective service of more than 5 years, the effective service completed prior to that break cannot be counted towards your DHOAS qualifying period, service credits, or tier level. However, there is an exception to this, and that is operational warlike service. Where the warlike service was completed before or after that break in effective service of greater than 5 years, it will always be counted towards your DHOAS service credits. Now, by contrast, if you have completed your DHOAS qualifying period and then you have a break in effective service of exactly 5 years or less, your effective service completed before that break will still be counted towards your qualifying period, service credits, and tier level. So in the first instance, the break of greater than 5 years of effective service would result in a full reset of eligibility and entitlement. Whereas a break of exactly 5 years or less after you have met the qualifying period would be considered a pause. Now, remember how an ADF reservist, to be considered effective for DHOAS purposes, needs to complete 20 or more paid days of service each financial year? Well, if a reservist doesn't get their 20 or more paid days of service done, this would result in a break in effective service. For example, let's say it's nearing the end of the current financial year, and as a reservist, you've got 19 paid days of service done, but are unable to complete that 20th day. That would mean that you are ineffective for that entire financial year. Or in other words, you have a 1-year break in effective service. So, as a reservist, it's always good to be mindful of this requirement and consistently complete the 20 paid days of service each financial year if you wish to be effective for DHOAS purposes. Transitioning out of the ADF can impact your DHOAS eligibility and entitlement as well. One of the key factors to be aware of is your total years of effective service at the time of your transition. If you've completed 20 or more years of effective service, you'll continue to receive or remain eligible for Tier 3 level payments, the highest of the 3 tiers. However, if you haven't reached that 20-year effective service milestone when you separate from the ADF, your entitlement will revert to or be limited to Tier 1, which provides the lowest level of subsidy support. One important point to be aware of, though not covered in detail here, is the impact of a medical discharge. If this applies to you either now or it may in the future, it's strongly recommended that you contact our customer service team. Medical discharges can affect DHOAS entitlements differently, and speaking with one of our team will ensure that you receive accurate advice tailored to your circumstances. Another important consideration is the final certificate rule. If you are fully discharging from the ADF, or if you're transferring to the reserves and no longer completing the required 20 or more paid days of service each financial year, you will only be eligible to receive one final subsidy certificate. This will be either from the date you officially discharge from the ADF or from the beginning of the financial year in which you no longer meet the requirement of completing 20 paid days of service. Now, the good news is there's no fixed deadline to apply for a final subsidy certificate, meaning that you can apply at any time. However, subsidy certificates are only valid for 12 months from the date that they are issued to you, and this time frame cannot be extended under any circumstances. So why is this important? Well, in this 12-month certificate validity period, you must establish a DHOAS home loan, occupy the property, and meet all other scheme conditions required to commence your subsidy payments. If these requirements aren't met before your final subsidy certificate expires, your eligibility for DHOAS will expire as well. With the final certificate rule in mind, it's generally recommended that if you are considering accessing DHOAS within 12 months of separating from the ADF or ceasing effective reserve service, that you apply for a subsidy certificate just before you separate or just before you cease effective reserve service. If you apply before this time and are deemed eligible, you'll have a subsidy certificate issued to you that you can use within the next 12 months if you need it. This way, you'll still have access to that final subsidy certificate at any time after you separate or after you cease effective reserve service. So, to summarise, where changes in your circumstances are concerned, whether they're service related, personal, or even if you're looking at making changes to an existing DHOAS home loan, we strongly recommend contacting our customer service team. The earlier we're informed, the sooner we can understand your situation, offer tailored advice, and help ensure that you're well prepared for any potential impacts. Now, let's dive into applying for a DHOAS subsidy certificate, taking out a DHOAS home loan, submitting a subsidy authorization request form, and starting your monthly subsidy payments. The first step is to apply online for a DHOAS subsidy certificate. You can complete this by either using the online form on our website, dhoas.gov.au, or by downloading a PDF copy of the application form from our website, which can be filled out and returned via email. As part of your assessment, we will also need some service evidence to confirm your ADF service. The ADO service record long version is the most common piece of evidence that we will require. Additionally, if you've completed any reserve service, evidence of this service should also be submitted. A statement of reserve days is a common piece of reserve evidence that we see. Once you've submitted through your application form, along with the required service evidence, one of our team will assess your eligibility for a subsidy certificate. If you are eligible, the certificate will be issued and submitted to you electronically at your nominated email address. Once you have received your certificate, you can then take it to your chosen DHOAS home loan provider. At this stage in the process, your communications with DVA will pause while you go through the process of finding an appropriate DHOAS home loan provider and setting up your DHOAS home loan. However, rest assured that if you have any DHOAS related questions for us, we are always here to support you. When going through this process, remember that you have the freedom to conduct your own research and choose the provider that best suits your needs. Additionally, there are a few key points to remain mindful of during this process. Namely, your borrowing capacity and your home loan interest rate is determined between you and your chosen lender and is based on their lending criteria, bearing in mind that lenders are required to comply with responsible lending laws and guidelines. Having a DHOAS subsidy certificate is not a guarantee of approval for a DHOAS home loan, nor does it oblige your chosen lender to lend you a certain amount of funds. And additionally, setting up a DHOAS home loan may incur additional costs that you will be required to cover. A quick mention as well that your DHOAS subsidy payments, your monthly payments, and the lump sum payment, if you are eligible for it, these are paid after your DHOAS home loan is set up, meaning they can't be used as an initial deposit on your home loan. Now you've received a subsidy certificate and set up your DHOAS home loan, congratulations. At this stage, your home loan provider will advise DVA of your home loan settlement. Once your home loan settlement is reported through to DVA, We will reach out to you via email and request that you submit a Subsidy Authorization Request Form, or a SARF for short. Completing the SARF, which is distinct from the application form, is a crucial step in this process. The SARF is used to declare that you meet the conditions necessary for your subsidy payments to start. With this form, you're formally requesting to begin utilising your entitlements in the form of monthly subsidy payments. As part of completing the SARF, you will provide us with information such as the address of your subsidised property, the date that you have or will occupy the property, your loan account details, and your loan settlement date. If you requested the lump sum on your application form and you've been deemed eligible for it, you will also need to reconfirm on your SARF that you wish to access it. After the SARF is submitted to DVA, one of our team members will assess your eligibility to commence payment. If you are deemed eligible to commence payment, you will receive advice from DVA advising you accordingly. The letter we send will include information advising when your payments will begin, roughly how much you can expect to receive for your first month of subsidy, and how your subsidy payments were calculated. There will also be information detailing the 12-month occupancy requirement, including when it commences and when it will be satisfied. Additionally, the letter and attached fact sheets in the email we send you will contain a wealth of excellent and valuable information, which will support your understanding of DHOAS and the various scheme requirements. Now, please be mindful that it can take 6 to 8 weeks after your DHOAS home loan is settled and your correctly completed SARF received before your payments commence. However, we will ensure that you receive any payments for which you are eligible. Please also note, DHOAS subsidy payments are not synchronised with loan mortgage repayments. DHOAS subsidy payments are made into your DHOAS home loan account on the first business day of each month for the preceding month. Additionally, if, when setting up your DHOAS home loan, you'll be refinancing your existing home loan from a non-DHOAS to DHOAS home loan provider, or if you're currently in receipt of DHOAS subsidy payments and looking to refinance, please be sure to give our friendly customer service team a call on the number provided at the end of this video. DHOAS subsidy payments, including the lump sum payment, are subject to fringe benefits tax. For further information on how DHOAS payments may impact your personal tax obligations, we recommend you contact the Defence Tax Management Office. This will ensure that you are well informed and prepared for any tax implications. Well, we've covered quite a lot of information, but don't worry, if you have any questions or would like more information on any of the topics that we've covered, we're here for you. There's our website, dhoas.gov.au, which has a wealth of information, and there's our friendly customer service team who are always happy to help. If you're giving our team a call, we can be contacted Monday through Friday, 8:30 a.m. till 4 p.m. your time, wherever you are in Australia. Or if you prefer, you can reach us at dhoas@dva.gov.au. We hope you're feeling more informed and excited about how DHOAS can support you on your home ownership journey. Thank you for watching.